Hello, 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 and welcome everybody. It's the weekend video update. Kind of ill prepared, but hey, that's just how I roll. Um, it's been a frustrating morning because I've had some website issues, and I think they're worked out now. Uh, I have yet to confirmation of that. It's working for me. The website is working for me, so I am not sure whether it's working for all you guys. You can just email me and let me know if you're having trouble accessing the nightly updates. Okay. Yeah, and I just wanted to also to say that if you are having trouble, the, there is a possibility that your browser is loading an old version of the website, kind of optimized for speed. And if you go into your browser settings and you delete your cookies, you can search in there in Google, and it'll tell you how to do that. That should refresh the website for you, and you should be able to access it. Okay. Um, but anyway, if you're having trouble, just email me and let me know, and I'll email you the tonight's update anyway. Okay. Let's get on to the uh, problem at hand. Okay, so we've definitely got some sort of corrective action going on in Eurodollar. The movement over the last few weeks has been net sideways. So we've had net zero. It's been impossible to trade probably. We've had no like net zero movement, and I'm still expecting this corrective pattern to complete. Uh, we're not there yet, I think. I think we have another pop to the upside to finish a second wave, and it could go all the way up as far as 112.50 if we reach the previous kind of most significant high there at 112.50. Okay, let's get into the hourly chart here. There's a possible alternate count that this recent low was wave one in green. You can see there on the 4-hour chart, I have wave one down into the August low. And then ever since then, it's been an A, B, and C, maybe a running flat correction in wave two, but we'll see how that works out. For the moment, it looks like some sort of triangle unfolding. We have three waves again into the morning lows. So I'm expecting this triangle to conclude with a thrust to the upside and a possible C wave. I've changed the count slightly this morning, so we could be looking at an A and then a B wave at the low here, or A up and then a B wave at the end of a possible triangle. And there is another scenario where A up and then this whole move here is the same triangle. Oh, that's what I just said. Wave A up and then wave B down, and then we have a three-wave move within wave C. So it could be wave A, B, C, D, E, B, and then C. And you would expect to run up to the upper triangle in either case, or sorry, upper part of this trend channel here in either case. So that would bring us up to about 111.90, so 112 with the previous high there being at 112.50. So that still gets us into the ballpark of where you would expect this three-wave move to complete. So next week, we're going to have to get some sort of conclusion on this triangle, and then if we get a break of 111.09, that level that we've been looking at all week, or probably over 10 days or so. No, what was it? Last Friday, last Friday's high. If we get a break of that, then that'll probably confirm wave C up is underway. Okay, so pound dollar. So far so good. We were looking for the last few weeks. We've been looking for that run up to 125.20, and the reason I picked that 125.20 is because this previous triangle here is a pretty clear triangle, which I don't have trend lines on. I should. So this triangle concluded at 125.20, and I was looking for this expanded flat to run up to that previous triangle. So that'll be a previous fourth wave. So it could either be wave 4 in brown, or it could be wave 4 at one lower degree. Price has reached that level now, and momentum is turning on the 4-hour chart to the downside. So, and we've got a spike lower this morning. So I think we're ready to turn down into a third wave, I think, in pound dollar now. Excuse me. You can see here the fib retracement levels across that whole wave one down. 50% retracement lies at, let's say, 126.70, and this morning's high got to 125.80. So we're right in that batten area of a completed retracement in an expanded flat. So let's get into the hourly chart here, and we will plan for next week. So here's that expanded flat. We have wave A up in 3 waves, wave A, B, C down in 3 waves, complete wave B, and then kind of an elongated 5-wave pattern in wave C. So depending on where you take the third wave, you could call that wave 3 and this wave 4 with this triangle. You could call this wave 3 and 4 with 1, 2, 3 triangle, wave 4 and 5 to complete. It was nice to see the spike lower this morning, because in the move off the Thursday lows, we have a pretty clear 5 waves. So we have 1, 2, 3, 4, 5 within wave 5 within wave C. So pretty close to a turn, especially since we've got a nice overnight spike to the downside and a continuation this morning slightly anyway. So want to see some sort of second wave lower high today, and completion below that 125.80 level that we reached this morning. Okay, so next week is looking like I will be looking for a larger bearish signal. We'll see how this 5-wave down unfolds. I'd like to get a break of that A wave, possibly these little internal minor fourth waves as well. So look for a push in 5 waves down below 122.80, and then some sort of larger lower high to give us an indication that wave 1 is underway. Or sorry, wave 3 is underway. Okay, so let's move on to dollar yen. The new wave count, it's working out so far, I think. We could be moving into wave B now. So I'm looking for a 3-wave run up in wave D, probably towards the end of, probably towards November sometime. Wave D would close out, and then we'd spend the rest of November and December declining wave E. So it's going to be, I think, pretty frustrating in dollar yen for the next probably the rest of the year before we run up in wave C again. Okay, so dollar yen, this is the hourly chart. We could have wave 5 complete. So we have wave A, B, and C in green there, completing wave A at one larger degree. And with 3 waves up in A, 3 waves down in B, and then 1, 2, 3, 4, and 5 in wave C. Again, a spike lower yesterday, or was that Wednesday? Yeah, yesterday. And a consolidation below the high today. So it's going to be hard to kind of find the degree at which this is moving right now, because I think that move here is a little bit low for this particular label, but it's possible. We could have a larger 3-wave move down in A, and then a 3-wave move up in B, and then another 3-wave move down in C of A. So wave A here is just for illustration. It might take a little bit longer to unfold next week. So you would expect, if this is correct, that we are going to see further kind of choppy action to the downside in wave A, to probably complete that wave A next week sometime later, probably later next week, Thursday or Friday. So next week is most likely to the downside, and I think we're done with wave A to the upside. but we do need a continuation lower. I'd like to see a break of that wave 4, 107.40 to kind of confirm this short-term count at the moment. But like I said, it's going to get choppy for the next while until we move up in wave C again. And wave C should be a 5-wave run higher. So if you were going to eye any sort of a trade in dollar yen, I think it'll be up in wave C. So we'll see how this correction unfolds. Okay. So the bane of my life is stocks as usual. But me being the bear that I am, I'll just stick to my guns. For the moment, still looking for a third wave decline. No sign of that yet. We've had a move off the high, but it it's been unconvincing. It's still a possibility. I mean, we've had a 3-wave rally to a slight lower high again, and we're down again today. Well, the futures are down this morning, so we'll see how that unfolds today. The alternate account is viewing this whole sideways grind off the May highs as a triangle, and if that's correct, then we're moving up in a 5th wave, and this would probably take the high of a wave 3 of 5, and then you get a 4th wave decline, and then a 5th wave rally. Needless to say, I don't want that to happen, but if it happens, the market never does what I want it to do. It only does what it's going to do, and that's that. So I'm just going to stay kind of open-minded at the moment. An eye to the downside, but open-minded. If we get a rally to a new high, well, then this alternate account 5th wave will be confirmed, and we'll just have to ride out the top of that and look for a decline again. But that'll be disappointing from my perspective, but reality reality is disappointing to a large extent. You tend to find out as you grow older. Okay, get the hourly chart. Sorry for sounding despondent. It's just the way it's running at the moment. Okay, these website troubles have kind of kicked me in the teeth this morning. Okay, so we have what I'm showing as an ending diagonal into the high of wave 2, possible wave 2, and then a move down in wave 1, and a pretty decent three wave rally up into wave 2 again. So futures are down this morning. We're flat below we're like 10 minutes from the opening in the US. So the pre-market is lower and consolidating lower. So we'll see if we do get another rush or a spike lower today, which breaks 126.900, or sorry, 26.900, or even 26.700. That'd be pretty cool. If we got a rally down which broke those previous lows, well, then that would, or sorry, a decline down to break those previous lows. That was a Freudian slip there, if you ever seen one. That would pretty much end, or it would go a long way to confirming a third wave. And this previous wave A high is 26,400, so that is the kind of trigger level for pretty much full-on bearish outlook. So let's see if we get down there next week. Eyes open, I suppose, would be the takeaway. 4th wave still underway in gold, I think. We're drawing close to an end to that. We had a couple of false starts off the recent lows, but we're kind of consolidating. It could be a triangle with a further 5th wave down to come, but we'll see how that unfolds. The hourly, or sorry, a triangle with wave E to come, and I'll show that in the hourly chart here. You can see wave 3 high, and then A down, B up. Pretty god awful C wave into the recent low here yesterday. So that was 1483 or so, and now we're moving up in a D wave. So far so good. It depends on where that upper kind of trend line is met. We don't really know just yet. You could be talking wave B now underway, maybe, and wave C to come. If that's the case, we'll probably get an early pop next week, maybe even today in wave C, and then somewhere around the 15, above 1500, 1510 to 1515 maybe in wave C, and then wave E early next week before we move higher in wave 1 and 2 of 5. So medium term looking up in wave 5. For the short term, early next week, looking for this triangle pattern to close out and complete wave 4. Okay, crude oil spike higher this week, spike lower again. We haven't fully closed out the gap that happened on Monday, but we have, with that gap, closed out the three-wave pattern and a 76% retracement level in wave 2. So wave 3 down is definitely on the cards, and we've had some pretty reasonably bearish action to the downside to kind of add a little weight to that idea. Okay, so let's get to the hourly chart. That's that wave 2 high. It may be a little different in the cash charts. I haven't checked it yet, but wave 1, 2 possibly to the downside, and maybe we're running up or we're working on wave 3 right now. Could be a triangle wave 4 within wave 3. Wave 1, 2, 3, possible triangle, fourth wave, and push lower into wave 5. I'd like to see wave 3 here close out much of this gap here. So this gap higher on Monday began at about 55.40 or 55.50, whatever that was, and I would like to see wave 3 in gray here push down into that 55.50 level. So that would necessitate a bit of a run lower today, and no more spikes to the upside. Now we could always look at this as a 1-2-1-2 pattern or an ABC within a larger move. So seen as we have a completion of a three-wave move up with a gap and a throw over above an upper trend line, then I'm leaning towards the change of trend now back into wave 1 of 3. So the outlook next week is further downsides, and we should hold these previous highs. I would like to see a further spike lower today, and we'll see how that works out later tonight. We will have a little bit more information, as always, at the end of every day. Okay, so S&P, pretty much the same idea as the Dow. Stocks in general, we're closing down. You can see here on the 4-hour chart, we're turning pretty bearish lower highs and momentum. So we're pushing, we're signaling a pretty reasonable high-end signal that price should turn fairly soon. We have series of higher highs and a series of lower highs. So divergence is well on the way since early last week. So towards the middle or towards the start of September, we've been diverging lower, even though the price has been pushing higher. So if this is wave 5, we'll break to a new high and then turn lower. Or if this is wave 2, we'll stop right now and turn lower. Let's get to the hourly chart. So I've shown the top of wave 2 as complete. So maybe 5 waves down in wave 1. The reason I'm most attracted to that idea is because of the retracement that happened after that. So that's pretty reasonable 3-wave correction to a further lower high, even though it's only pips. But that's the way it works, or points. So let's see if we get a push lower in wave 3 today. I know I'm always out on a limb with stocks because I'm just such a damn bear, but I know that this market will turn. I know that we are in the heady highs of a bull market right now, the ending stages of a bull market right now. I know that the turn will come and the crash will come. sooner rather later, in my opinion, but soon enough, most likely, definitely before the end of the year. We're going to get a pretty horrible scare. So I'm just kind of preparing for it. If we see a decline, I'll prepare for it. In general, I want to see a larger move lower, 5 waves lower, and a 3 wave rally to confirm that the market has turned, and that's what I've been looking for over the last few weeks. It just hasn't occurred yet, and yet being the operative word. So early next week, I want to see these highs hold, that 30.27 high, and I want to see a turnover back into wave one again. Okay, so silver. Silver is. I was a little bit cautious on silver yesterday because of the possibility of an alternate account developing. So that's kind of still the outlook I'm taking right now. And the idea is, or the question is this fourth wave over yet? We've had some nice, reasonable action to the upside off that most extreme low, that 1736 low, or whatever that was earlier in the week. So we're still forming a higher low. It's still possible, but I'll get into the hourly chart now and we'll show you why I think there could be an alternate account ongoing here. So the working thesis right now is that we have a wave one up, 3 waves down, a wave two, and we're possibly moving higher in wave three now, and that'll be 1, 2, 3 of one. And again, I'm looking for wave one and wave two to close out before switching on the full gas up into wave three. The alternate count shows a triangle. So we've had this A, B, C, D, E scenario. If we get, if price stays below, let's say $18 today, and turns and breaks 1750, that pretty much would make the decision for us, and I think that triangle alternate account will be in play then, and we'll look for a run down in wave C next week. But if we get a break of 18, let's say 1810 this week, or sorry, today or Monday, 1810 being the high of wave one here, that would pretty much confirm wave three of one. If we get a break of 1846, I'd pretty much be sold on the idea that wave four is over and we're moving higher in wave five. So kind of betwixt and between. I'm kind of just holding my fire right now in silver. So I haven't given you any conclusion there, but that's sometimes that's just the way it goes. Eh? I don't have the answers. Eh? Okay, so here's the 10-year. It's looking pretty freaking bearish right now. We have a reasonable 5-wave move to the downside, complete wave one, and we're working on a 3-wave move up in wave two. And we have, let's get the fib levels there. We have a previous fourth wave here at 1340. That's pretty much bang on within reason. That's 50% retracement level at 130.40. So I'm looking for wave two to hit that 130.40 next week and complete a 3-wave rally in wave two. And then we'll look for confirmation of a turn down into wave three. So if this short-term count is correct, then we have topped out in bonds for the foreseeable future, meaning a very long time. And I think a bear market in bonds could well be underway. And with that bombshell, I have finished 9 markets, and just want to say thanks for your patience over the last 24 hours with the website outage problems. You try and make improvements on a website and you install software and it crashes the damn website. I'm a one-man show, so that's just the way it works sometimes. Uh, I hope, well, I've been informed that everything's sorted now, so I hope that that is true on your end. It seems to be true on my end. Okay, so thanks so much. Thanks for being with me during the week. Thanks for putting up with me. And we will be back on Monday again. Have a great weekend. God bless everybody. Godspeed. See you Monday. Bye bye.